Market anxiety, gold, silver, and oil all push higher as stocks dive. In today's cover story, the dangers of hiring gaps in the healthcare industry, plus the hot tech product that may be giving users TMI, and trader plays on stocks that are close to touching $1,000. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, everybody. It's Friday, August 16th. I'm Angela Miles. In today's first look, selling is stepping up on Wall Street. The Dow fell more than 200 points yesterday, followed by heavy losses in the Nasdaq and S&P. Gold and oil both gained on the session. Dell's early earnings, the computer company was supposed to report next week, but instead rolled out results last night. Dell's earnings and revenue topped Wall Street's expectations. However, profits dropped 72%. The stock continues to trade around $13. And before you let the good times roll after work tonight, Johns Hopkins researchers say 1/3 of people who wind up in the ER on Friday or Saturday have been drinking, and most were drinking Bud. Mark Sebastian of Option Pit Mentoring joins us now. Let's get down to it. What is happening with this selling spree? What's going on?
Well, the 10-year is the dog that's wagging the entire market's tail. The 10-year began to really sell off yesterday morning, and that drove all the markets. Drove gold, drove the S&P 500. We saw the VIX rally as well. So just all in all, an ugly day yesterday.
What about silver and gold, especially SLV and GLD, were the talk of the town yesterday among commodity traders?
Yeah, it was really interesting. I think part of what happened with the 10-year, besides the taper talk, there's some small underpinnings of inflation. So if we get some inflation, that's the one thing that can cause gold and treasuries to really move opposite of each other, which has been not the trend as of late. They've been kind of moving together up until recently.
Today's an options expiration day. What will that bring to the market?
Well, you know, I think we could see all kinds of crazy stuff, especially if today ends up being like yesterday. If that's the case, then look out. Things could really be whippy.
What a warning. Thank you, Mark.
Have a good one.
Rising violence in Egypt is bringing worry to Wall Street and a boost in oil prices. Oil futures climbed on reports of hundreds dead and thousands injured in Egypt as protesters and supporters clash over the country's ousted president, Mohamed Morsi. The political turmoil could cause the military to close off the Suez Canal. Oil spiked above $700 yesterday on fears of a disruption of oil exports.
You know, the violence has traders on edge. 2.5 million barrels does flow through the Suez Canal on a daily basis, which represents approximately 8% of OPEC's output on a daily basis. And, you know, any supply disruptions certainly is keeping a natural bid under the market. If we do see the violence kind of die down over the weekend, we should probably see the market move a little bit lower come into Monday.
Yesterday, President Obama broke from his vacation to call for an end to the violence. He also canceled the biannual joint military training exercise with Egyptian forces.
Investors are pushing up the price of gold. Gold futures shot up $32 yesterday as an economic protection play by money managers and investors. Consumer demand for the yellow metal is up 53% from last year. CNN Money reports there's a rush around the world with consumers buying jewelry, coins, and bars of gold. Most of the demand is coming from China and India. Although gold rallied yesterday, gold futures are down from last year's high of $1,800 an ounce, giving some gold bugs a bargain.
Profit woes from Walmart played a role in causing stocks to stumble yesterday. The retailer's sales slipped 0.3% as consumers held back on spending. Profits were up slightly last quarter, but the big box chain cut its profit and earnings outlook for next quarter. Shares in Walmart closed down nearly $2 to $74.
The housing market continues to hold up as a bright spot in the economy. The latest numbers show foreclosure filings are down 31% from a year ago. Realty Track reports lenders repossessed just under 37,000 homes last month. Completed foreclosures are predicted to total 490,000 this year, which is down considerably from peak years.
American Airlines' plan to fly out of bankruptcy hits a snag. The bankruptcy judge reviewing the airline's reorganization plan reportedly told AMR attorneys in court yesterday he had lingering doubts about approving the plan while the merger is being challenged. The challenge is coming from the federal government, which argues the mega merger would hurt competition and consumers. Attorneys for American counter the lawsuit should not stop the airline's reorganization plan.
As the country transitions to the new healthcare system, physicians and hospitals are implementing new medical codes for diagnosis. Medical coders are now in high demand. There's a shortage of 3 to 4 million workers. Starting salaries are between $50,000 and $60,000 a year. Ira Shapiro of Code Smart says the jobs could be ideal for veterans, people who don't have college degrees, or nurses.
Nurses who may already have some clinical expertise that want to transition to out of the operating room or to be on their feet all day. So, for many, many different types of people.
Shapiro says clinical documentation specialists are also in demand, as many offices still have not made the change to electronic medical records.
In today's cover story, a new survey finds nearly half of all nursing job openings are not filled for 6 weeks or longer. Employers and recruiters disagree on the cause, but in the end, it could be patients who feel the effects of those vacancies. Demand for healthcare workers continues to outpace supply, according to outplacement firm CEO John Challenger.
It probably will mean longer lines, in the future, more waits.
He says it will only get worse as the government pushes more consumers to get health insurance and pushes providers to try to keep costs down.
One way, hospitals and healthcare organizations deal with the fact that they are under pressure financially is they just leave jobs open. Their service levels go down, their quality levels go down, and we're all left to suffer.
A new survey by CareerBuilder says 59% of healthcare organizations cite at least one negative effect of extended job vacancies, including lower employee morale, overworked staff, less attention on patients, higher voluntary turnover, more medical mistakes, and increased lawsuits.
I would say at Rush, it hasn't been as negative of an impact for a variety of reasons. For nursing and some of the allied health areas, we have our own in-house staffing office that can supply candidates, supply employees on a temporary basis to fill the needs in those departments.
The recruitment manager says it's hardest to find specialized nurses and practitioners with a master's degree. The survey said applicants' lack of experience is the top reason for unfilled positions. Next is salary requirements that are too high.
I don't think throwing more money at it is necessarily the answer, and we haven't seen that same issue.
Recruiters recommend nursing degrees, but 24% of companies say they need experienced healthcare workers, not new graduates.
How are they going to ever get experience if they don't ever be exposed to what they're supposed to be getting experience for? If you're a nurse, you need to work, The more you work, the better you get.
That diagnosis may not improve anytime soon, as 20% of the hiring managers surveyed said their nursing jobs remain unfilled for 12 weeks or longer.
Obamacare is on the agenda this week at the Republican National Committee meeting. Former Speaker of the House Newt Gingrich told the crowd the Republican Party needs to come up with ideas rather than attacks on health care reform. He adds currently the GOP has no alternative to Obamacare. Yesterday, consumer watchdog groups reported con artists are taking advantage of confusion surrounding the new rules under health care reform. The best place to get information to avoid getting ripped off is this site, healthcare.gov.
Bringing up baby is getting expensive. The average cost of raising a child born last year for 18 years is nearly $250,000 without the cost of college. According to a report, that's up 3% from 2011. Depending on parents' income, the cost can range from $200,000 to $500,000. Healthcare, education, and childcare spending has increased since the year 2000, but income levels are the same.
The timing is out on Samsung smartwatch. A report says the tech company plans to unveil the Galaxy Gear at the Consumer Electronics Show in Berlin next month. This is a rendering of the watch. It's expected to have a flexible screen and interchangeable wristband. The price is still a secret.
Get ready for an explosion of Downton Abbey merchandise. The British hit drama has captivated millions of viewers. Soon it will attract buyers, too. From home goods and clothes to beauty products and wine, the show is finally cashing in on its merchandising potential. The show's 4th season premieres on the small screen in the U.S. in January.
A small step for man is a giant leap for SpaceX. The company is looking to commercialize space travel and celebrates a win this week. Check it out. Engineers launched a 10-story rocket 800 feet in the air It flew 330 feet, albeit sideways. SpaceX is led by Tesla CEO Elon Musk. Back on Earth, here's the economic calendar for today. It's housing starts, building permits, productivity, and consumer sentiment. Still to come, who wants to own a $1,000 stock? Several could be on the way. Plus, the Apple seed in this week's Traders Unplugged. Will the latest hype cause that stock to grow? And after the break, privacy trade-off. Is the pain worth the gain of prying eyes? Bill Mueller checks it out next.
It is amazing, or maybe a better word would be unsettling, just how much news there's been of late on electronic intrusion into our personal privacy, and you know, it's bound to get worse. Take the introduction of Google Glass, that computer you kind of wear. It's another electronic convenience, but it requires this sort of unspoken trade-off. Mike Salvaggio is a founder of SEO Brand. That's an interactive marketing company, and he's often turned to as an expert in matters on the internet and software. So Mike, talk about this trade-off as technology becomes more and more commonplace in our lives.
It's very invasive. I mean, the more technology that's rolled out right now, the more privacy we lose. So we make these tremendous gains in being able to do all different types of wonderful things with technology, but we're basically just giving away what little bit of privacy we actually have left.
I don't think people are aware of that, and it seems like we've almost passed a point of no return.
It is past the point of no return. I mean, you could see kids today are uploading their whole life onto Twitter. I mean, anything they do, they're putting on Twitter, they're putting on Facebook. So as wonderful as these communication technologies have become, keeping in touch with old friends and the great things they've done, they've also pretty much robbed you of anything you'd like to keep private, and that's a real problem.
Mike, what's the issue with Google Glass? That's the latest golly gee whiz device out there.
Well, it's a wonderful device. I mean, there's all different types of things that you can do with it. But again, when you look at the dark side of Google Glass, bar owners, restaurant owners, I mean, even as far as casino owners, they don't want this device anywhere near their business because of the privacy that it invades.
Yeah, so some people certainly are aware of it. So, okay, do we just surrender to this loss of privacy, or can we somehow take a stand and protect some part of it while we're still sort of a functioning member of the modern electronic society?
I think it's going to go to the point, it's going to get to a breaking point where it goes just way too far, and people are going to become accustomed to using these wonderful pieces of technology, but then again, they're going to realize at some point that I've pretty much given up any privacy that I have, and people are just going to have to be aware of it. I mean, you have to be very, very careful of anything you do because somebody could be watching you with Google Glass, and before you know it, upload it in a matter of seconds with a voice command to social media and the internet.
Yeah, we hear all the stories about hackers doing nasty, scary things around the world, and yet we just sort of blithely move forward and keep using our technology.
It almost becomes a point where, and it's a great point that you bring up, like the hackers are just getting into everything right now. So the fact that they can even control a car through Wi-Fi and they're going to control what you see through Google Glass, I don't know. It's pretty scary.
All right, I feel like I want to take my cell phone and throw it away maybe. All right, Mike Salvaggio, thank you so much.
You got it.
Thank you, Bill. Now on to a check of what our viewers have to say. Leslie responds to a report on IT hiring by Chuck Coppola. She says our government allows companies to bring foreign employees in using H-1B work permit status because they work for less. But those companies claim they cannot find workers here. Meanwhile, U.S. citizens go looking. Our next email comes from Brad, who writes about last week's viewer mail question from a disabled viewer who wants to buy a franchise, saying, I can't believe you read an email from a person who is on Social Security disability. She said she is an entrepreneur who wants to start a company. She is on disability because she can't work. Brad. And a nice note came this week from Charles. Dear FBN, I'm writing to say how much I appreciate your programming. I go to my local fitness center at 4 each morning and watch Angie on First Business News. I find FBN a breath of fresh air and well worth my time. I appreciate being kept up to date on the market and specifically how high-tech companies are influencing it. Great job, FBN. Thank you, Charles. Well, let us know what's on your mind. You can tweet us on Twitter, find us on Facebook, email us at comments@firstbusinessnews.com, or call 312-660-8377. We love to hear from you. Coming up next, crunching the numbers on Apple is at stock, headed back to $700. And later on, the $1,000 question. Does Google, Priceline, or MasterCard have the best chance of being first to crack the $1,000 mark? Find out later in Chart Talk. We are kicking off the weekend with Traders Unplugged. Joining us now from the floor is CME Group Alan Nuckman and Andrew Keen. Good morning. And topic number one, end Eurozone. The recession is winding down in Europe. So now, how do you play it?
Who said the recession? Alan finds its obscure articles that says that. If you look at the EEM, it's down 10%.
The way you measure a recession,
US stock
it's
market
over.
up 16%. I want to get short the EEM. I'm selling the 39.5, 40.5. Bear call spread 50 cents. If it rips higher, I'm defining my risk versus reward. EM and the stock market's headed lower.
All right, the official recession is over there. And looking at the euro currency, the death has been greatly exaggerated. It's at 134 now. It looks like it's getting 136, possibly 140. My play to play the eurozone is P&G. Very conservative. You might appreciate that.
Topic number two, tough love. This week, a report came out that there are 25 companies that are very tough on job hunters. Does a tough interview equal a good stock?
Well, you're going to have to answer that with the company that you think they obviously have the toughest interview process out of that list. I know you're going to like the Google, so what do you got to say?
I looked at 25 stocks, and Alan knew what I was going to choose. Google, they're innovative. The stock chart looks great from the bottom left to the top right. Recent pullback here, maybe some cash going into Apple out of Google.
How do you
I don't
trade
want to get long it just yet. Once it breaks 880 to the upside, I want to get long it. It looks like it's
How do
headed
you trade
in the
Google?
short term.
How does the average
You
retail
buy it.
guy trade Google? There are many options on Google, so that is something
You
to
trade
know.
the minis.
Okay, that's a good answer.
10 shots.
There's a couple of stocks on that list, NVIDIA and Sapient. They both look like they have about 50% moves technically. If they break above their recent highs, they can get to 23. So from a technical standpoint, those were the companies. But I don't like the premise. Just because a company is really hard to get a job for doesn't
Google's
mean
innovative. It's
that
the
the
best
stock
company in the world,
is that
period.
good.
Topic number three, Apple appeal. All of a sudden, we're hearing tweets from Carl Icahn that he's buying more shares of Apple. He sees the stock going to 700. George Soros doubling down on his position. What do you do with Apple now? Is it a buy? Does it have more appeal?
I'm obviously going to say Apple's not a buy right here. However, it is too strong to short. Even today with the S&P 500 down 23 points, Apple's actually up, hitting and lingering around this 500 level. This might be every time it sells off is a buy instead of every time it rallies is a sale. I think if they get into this,
So you're changing sentiment at least.
Short-term sentiment is bullish. Okay.
Well, this is the first time we've been to
Short-term
500
sentiment.
since January, but the risk reward's no longer there. We've already rallied $120 off the lowest. The midpoint is about 550. 580 is the target.
No chance it gets a 580.
580 is the
Period.
$100
580, no chance.
range that it traded in if it breaks out.
And for your bonus round question then, name three stocks that are trading above $600.
Priceline, Google. There's two. How many do we
There's
have?
two. We got to come up with another one.
Above 600.
Amazon's not it.
Oh my God.
Blackstone's $300.
I had MasterCard as the third choice.
Oh, there you go. There you go. That was the third one.
And keep in mind, on Labor Day, we will have a special edition of Traders Unplugged, so we are asking you for your questions to ask the guys. Thanks a lot and have a good day. A man with a million trading ideas joins us now to talk about some $1,000 stocks. Good morning.
Good morning, Angie. How you doing?
I'm doing very well, Tim. And what do you think about some of these stocks that are closing in on $1,000? Priceline, Google, and maybe even MasterCard.
Yeah, absolutely. I think you really have to look at, valuations when they get up towards, that magical $1,000 level, and certainly PE multiples do ultimately matter for these, high flyers. So, taking a look, I think, of the three, MasterCard certainly trading at the cheapest comparative valuation, Google probably somewhere in the middle, and Priceline kind of off the charts. So, growth going forward, certainly Google and Priceline probably outgrowing MasterCard. But But of the three, I think higher interest rates might actually favor MasterCard. They make a lot of their money certainly on the float. So the fact that MasterCard may benefit from what looks to be higher interest rate environment, whereas Google and Priceline may falter, I'd favor MasterCard of the three to hit that magical number first.
Psychologically, how do traders view these stocks? Is it something where as a trader, of course, you want them to go over $1,000, but is it a big deal? Does it matter, or is it just watching the charts on a day-to-day basis that matters more?
Yeah, I think short term it matters, as we saw kind of, yesterday in Apple passing 500, then trading down below when it didn't hold. So for a couple days, I think that battle around those big round numbers, sets a battleground. But ultimately, the stock's going to, rise or fall above that number, more on how it, makes its money and how its valuations are set. So short term it matters, long term probably not too much.
Thanks a lot. Good to talk about $1,000 stocks. It just sounds good, right?
You got it, Angie.
That's the end of our show for today. Coming up next week, house flippers are back. But are there more flippers or floppers? From all of us at First Business, have a wonderful weekend.